welcome to a Senior Citizens Forum. I'm Janice Wood, your host. A Senior Citizens Forum is being sponsored by Benefits for You True Insurance Services, where they provide Medicare insurances, Medicare supplemental plans, Medicare prescription drug plans, and Medicare Advantage plans for people that are 65 years of age and older, or if you're under the age of 65, for people with certain qualifying disabilities. But today we're not talking about Medicare. We're going to be talking about life insurance, and we're going to be talking about life insurance with a friend of mine, Joshua O'Neill, and he's becoming passionate about this. So, hi, Josh.
Hi Janice, how you doing?
How are you doing? Um, I'm looking forward to watching you grow and gain more experience in doing shows like this one.
Yeah, thank you. Happy
And
to have to be on. Thank you for inviting me back.
yeah, so
Appreciate it.
I am excited about having you back today.
Mhm.
As I said, I was telling everyone as I was doing your introduction that um, you're new to life insurance, fairly new,
Yeah,
and I know you've been learning a lot, and I've been talking to you because we see each other on a weekly basis. We do a lot of business networking together, and it's been fun to watch him over the last several months growing and getting more comfortable with what he's doing. So one of the things that we are going to talk about is like insurances for senior citizens.
mhm.
Yeah. And what products are available? And can we also answer that question, should you sell that insurance? So let's just, start off with what products are there available for seniors, okay?
Yeah,
Yeah.
absolutely. As you may know, that a lot of life insurance for seniors is getting quite pricey. That it's harder to obtain because let, let's let's be real. We are betting on how long we are living, and then how much we are looking out for others. The greatest gift that you can leave your family is wealth, and that is found through life insurance. Is found through your will and all your other assets. But the biggest thing is that you are preserving a financial future for those you love. And we'll talk about the three main types that we find in life insurance. This is the main three is term, so temporary; permanent, that is there for your entire life; and annuities, which is something a bit different that we'll dive into. So term is completely temporary. It's something that you may not have a lot of money for, but in the time span that you allotted, you can have a full death benefit of a lot higher for quite cheap. So it all uh, it all depends on the three main things. So, of course, the type of insurance, what's the amount of coverage, your health, and your age. So term, you'll find more with your new families, people who are just getting off the ground financially. For example, I was helping out a family who just had a kid. They just bought a new home and they're starting a new chapter in their life. And they want to be covered in case, God forbid, they didn't make it home the next day. Well, they're not someone to have thousands of dollars at their expense, being able to cover for their family in case something happened. They need to pay off their house. They like to send their kids to college, and they want to set them up with a good spot for later. And so term is was fantastic for them, as it was a young family, only costing about $20 a month, but they were covered.
Okay. My question would be is that if I'm looking, I'm a senior,
Hmm.
okay,
Yes,
and I now have grandchildren.
yes.
Okay. So if I have term insurance, can I buy term insurance? Let's just say if I wanted term insurance for final expense
Mhm.
insurance, which is something that's very popular.
Yeah,
And I would think it wouldn't be as expensive as a whole life insurance.
right.
Okay.
Yeah.
So just real quick, can I do that as a senior, buy a term insurance policy?
Yeah, you absolutely can. In terms of final expense, that's the major coverings is your burial, casket, the whole 9 yards when it comes to your memorial, any sort of transportation. I had a client come and ask, I live in California. I'd like to be transported to Michigan, where I'd like to have be buried. That's all covered in final expense. It's going to be a little more expensive. This is in the realm of term insurance. It's usually, hey, I only have about 5 to 10 years left. I would like to keep myself covered for that, and that's where it would come from. It gets more and more expensive as the years go by. So it's more in the sense of, okay, I'm ballparking that I only have about 3 to 5 years left, and I'd like to make sure my loved ones aren't burdened with the final expenses.
Right. Because I know if I wanted to buy term insurance right now as a senior, okay, let me go back a
Yes.
little bit. Okay. As a senior, I'm looking at, so when I'm younger, I don't have as many health issues, or I shouldn't
Right.
have as many health issues.
Right.
As we age, we health issues come up.
Yeah. And the biggest conundrum, Janice, is that right here, right now, is most likely the most healthy you are at the moment and what you'll ever be. And so people are hesitant because, oh, I might not pass, or it's going to be a little more expensive. I'll wait a little longer. And more often than not, you're going to be a little less healthy a few years down for when you're thinking that you're going to have a better expense for that, better premium. But that's typically not the case.
Okay.
So, yeah. And you'll likely have a much higher term term price. And the whole point of term is that it's supposed to be cheap. And if I'm in my 70s, it's not going to be that cheap. So typically we look at the other two options for life insurance as a senior.
Yeah. Okay. Because I'm looking at something that I want to be able to fit in my financial budget.
Yeah.
Okay.
Yeah.
So and just like if when I'm younger and I have my children and I wanted to leave them some money in case something happens, like you were saying
Hmm.
earlier, because what do they say it? Because when I did life insurance, they said things like, good things happen, bad things, excuse me, bad things happen to good people.
Yeah.
And
Yeah.
we don't think, and I remember the case that they talked about, I was the you know, I was somebody she left three children, the mother who
Mhm.
took care of the children, okay? And she was killed going to the grocery store. Now, she didn't work, but now what left it to her husband is that he still has to work to support his family.
Right.
Now he has to bring in people to take care of them, do those things, okay?
Yeah.
But as I'm older, I'm looking at it in a different in a
Hmm.
different way. Okay. I'm looking at it like, okay, my children are grown. Okay.
Yes.
My children now have children and they have to take care of all the expenses of their children.
Hmm.
And I'm looking at if I want to buy, let's say, final expense insurance, it's like I'm lifting a burden from my children.
Hmm.
Okay.
Yeah.
It's like you were saying, and just like what you said a second ago, I'm at the healthiest that you're going to be at this second.
Yeah. And harping off that, I see two main ways to leave that sort of legacy for your kids or grandkids. So I've seen it. One case we're working on right now is that a great aunt is wanting to leave something for their kids or grandkids. Yeah, and what we are doing is that we're opening life policies for the grandkids during that time. So the expenses, the premiums are a whole lot cheaper. So it's based off their age and health. So you're able to fund into that. And so when you're gone, they will have something that is now continuously growing. There's living benefit to this now the second one, permanent life insurance. That is the main way that is a great gift, and you're able to fund it however much you can. And then the second way is the policy on yourself. So having that final expense or having a higher death benefit, so the beneficiaries receive the money as soon as, God forbid, you you don't wake up in the morning.
Okay, I this you said a whole lot there, and so I have some questions to
Yeah.
ask. Well, one, I want to go back to the lady who was a senior,
Hmm.
and she has nieces and nephews, if that's correct, or
Hmm.
maybe some grandchildren, and she wants to leave something to each of them. So she went ahead and she opened up life insurance policies in each of those children's names.
Yeah, yeah, you absolutely can. You can be the payee going into it. It doesn't have to be under your name. It's going to be with them. So it's not only helping them out in case they want to take out a loan against their policy, so they could once they grow older, they graduate college, and they can pull out money from there and be able to put a down payment on their house.
Well, that's a great idea because I can give an example of I have some cousins
Hmm.
who were going through some documents and found life insurance policies in each of their names. And this is stuff
Yeah.
that they found, I think it was in their parents. Their
Hmm.
parents went and took out life insurance policies when they were younger. So we're talking a long time ago, okay?
Yeah.
Uh, and they discovered this stuff when they were in their 60s. They
Exactly.
had no idea it was there. Those policies were forgotten about, okay?
Hmm.
But as they were going through their parents' stuff, there were those policies sitting there.
Yeah,
And
it's that's a great surprise to have.
and it wasn't term insurance, it happened to be whole life insurance,
Yep.
which gained equity.
Yes. So it used there was a time back in, I'd say, the 90s that term would gain some sort of cash value, very little. But
Right.
now we're talking about permanent insurance, whole life. There's new products that are growing a little bit faster now. But yes, exactly. Your permanent life insurances gain cash value and can grow over time, just either depending on the market or a guaranteed return. And so with that, you know, many years go by and that return is so much greater, and it's all tax free as well. So when they pull it out, they are not burdened with any sort of taxes.
So I think for them, it was like maybe their policies originally were for a couple $100.
Hmm.
And because it just sat there for like 60 years or more,
Yeah.
they were like, where did this come from? Look at they had all this money sitting there because
Hmm.
the actual amount was like I think a couple, as I said, $200. And what a surprise that was to find that.
Yeah. And in a lot of policies these days, you can put in money, and once the cash value is higher than the cost of insurance, you don't have to put any more money in, so it'll be growing on its own. A fun fact to asking the question of, oh, I can insure anyone. The answer is yes, as long as you have insurable interest. So I really care about my grandkids. Yes, that's enough that you can insure them. You can take out a policy on them.
I can assure. So you can not only take out term insurance, which I always look at term insurance as being like temporary insurance.
Mhm. Yeah, and
Because,
you can always convert that into a permanent policy in case you need it longer, but it's usually just a net that you can't quite afford a permanent policy, but you really need the coverage for any extra debt that you may leave.
okay. So if you're sitting there as an adult and
Mhm.
you've taken out, say, 20 or 30-year term insurance, and all of a sudden you're going, I want to convert that to a whole life insurance policy.
Mhm.
That's before, the premiums go up, or
Yes.
yeah,
Yeah,
because term insurance does go up after a certain point to keep it.
yeah. I was actually looking over my parents' policy, and they opened it up in uh, '98, and we're looking at uh, the bill of premiums, and it was for 30 years. So once it hit year 30, the cost of premiums skyrocketed, and they weren't aware, they did not know, and there wasn't an agent or advisor to call them up saying, "Hey, it's about to skyrocket. Hey, would you like to convert it?" As most insurance companies
Yeah.
uh, will have a conversion plan. We'll take some of the credits from the term policy and make it a little bit cheaper for a permanent policy, whether it be whole life, universal, variable, or index universal life.
Right. So I know we're throwing all these terms out
Yes.
there, okay? So
Mhm.
that's why you need to talk to a professional like Josh, okay?
Yes.
And he will be able to sit down and explain those terms, what they exactly mean,
Mhm.
okay? And I know he's going to sit there and he's going to look at it for what your needs are, because
Yes.
no person's needs are exactly the same. Because I find that in the health insurance industry,
Mhm.
people think it's cookie cutter. Well, life insurance isn't any more cookie
No.
cutter than health insurance is. And you don't want it to be cookie cutter.
No.
You want it to fit your personal needs for your personal situation.
Right. Yeah. I see that a lot. As it used to be, oh, I just go online, kind of like car insurance, where it's okay, there's only going to be one rate, and you can shop around different companies, but it's all the same amount of coverage. And
Yeah, but still, it's going to be different
yeah,
according to the amount of coverage you're going to get, even with
exactly.
car,
Yeah.
car
Yep. Yeah.
property and
Every
casualty insurance. Yeah,
Exactly. Everyone's a different car, and it's
yeah.
going to be covered in a different way. So I would hate to get coverage for your rundown 1995 Toyota Tacoma, but you're paying as much as you would for a Lamborghini.
Well, yeah, but the same thing. If I own a 1957 Ferrari, and
Hmm.
okay, the insurance is not going to be the same as it's going
No.
to be for a Hyundai.
Yeah, exactly.
Yeah,
Everything needs to be tailored to you and your story, along
right.
with your own path. You have certain goals. Some people saying, "Oh, I really need to. I'm afraid of outliving my money," versus people who are saying, "Oh, I have too much money. I don't know what to do with it." Those are going to have different insurances. It's going to go different places. So it's tough to go online and just type in, "Okay, this is what's going to happen." But you need to talk to an agent and advisor. And I'm more than happy to either
Right.
house calls, Zoom, whichever.
I'm going to put your information back up in a little while, but right
Yeah.
now, because we were throwing out all these different terms,
Yes.
I wanted to make sure people know that, whole life insurance has different categories to it,
Mhm.
as the term insurance is temporary, but a whole life insurance policy, you can build equity. So when that
Yes.
term insurance runs out, like Josh was saying, like in 30 years, okay, uh, it's done with, unless you're going to go pay that high premium,
Right.
okay? And most people are going to go, I've seen those jumps in premiums, okay?
Yeah.
Because
Oh, it's scary.
I remember my brother going, wow, what happened here? But if you had a whole life policy, even though you're going to pick it up for less because the premium is going to be less, it's still going to continue building equity in it. So when
Yep.
I'm talking equity, and you can tell me if I'm wrong, okay?
Yes.
Equity is like when you have a bank account and you have interest, the
Mhm.
interest keeps building. So
Yes.
that also happens in a life insurance policy.
Correct. Yeah, you become your own bank essentially, as
Right.
you'll take out loans on that policy, and you can give the money back, or you don't have to, as it's up to you on how it's going to grow. And permanent, it used to be only whole life. Now there's a few other products depending on how you're feeling in the market. So whole life is what we grew up with. It's something that is has a guaranteed growth no matter what. So if the market is at its lowest, you're going to get 5%. If it's at its highest, you're going to get 5%. And those sort of guaranteed growth is what's very attractive to people who are, say, afraid of the market, versus on the complete other side, it's called a variable universal life.
Okay.
And that those are people who want to see more growth in that, and so they can take out more faster depending on how the market does.
That's really good. So, but me as a senior, I mean, we're trying to give people a lesson on insurance, and then
Yes.
I keep bringing it back to seniors. Okay,
Yes.
so as a senior, I don't want life insurance for the same reason my
Mhm.
son may want life insurance. Okay,
Right.
I
Yeah.
want life insurance for different reasons. So we talked about final expense, which
Mhm.
is really interesting because you can get it as whole life or term.
Mhm.
Okay. You can still build equity in it, but you're
Yeah.
going to pay more for it. So again, it's going to depend upon your situation. But if I'm sitting there and I'm thinking, well, I need final expense to take care of those final expenses.
Yeah.
And
And I would like to talk about my third one. I'm going to start
yes,
off with a story and how that's going to work. So there is a couple we met. It was one of my boss's clients. Their names was Tristy and Mac, and it Mac turned 65, and Tristy was 62. But they said, "Okay, it is time to retire." They retired together, and we opened up a it's called an income annuity, and that was right before COVID. Well, COVID hit, and a lot of people lost money in the market, and that started to become a big problem. And not only that, Mac was unable to got ill and couldn't do two of the six main functions that include bathing, dressing, moving around, toileting, eating. And so then they were looking at a problem. Well, we're running out of money because the market's down. We're going to have to liquidate our 401k. And we said, hold up, you have an annuity, which is life insurance. It has death benefit, but it's giving you a guaranteed lifetime income rider, meaning you can never run out of these funds. So during that time, if God forbid you were to not make it home one day, while there was still money in the account, you have your death benefit, you have your final expense, you have everything to send to the beneficiaries. The moment the account runs out, Mac was still able to not only get that money, but while he couldn't do his main activities, he had double the income of what it was. So instead of uh, selling the business, had a pretty high annuity, getting about 80,000 a year. instead got 160,000 a year for 5 years, and that is the magic of life insurance. They didn't have to liquidate the account. The stock market came back up. We had a great year last year, and they were able to liquidate it then. And so now they are living not paycheck to paycheck, and even then not fully living off this income rider either.
That's a great story. I really like that story because my question with annuities is versus regular life insurance. On an annuity, do you have to pay tax?
You have to pay tax on the income. It's tax deferred, so it will still grow with the market. If the market were to collapse, it's not losing anything. But when you are distributing it, there is a tax on it. So we already have that in our system. So when we show you a number, it's the tax is already taken out. So here is post tax the numbers you'll get.
Okay. So if I have regular whole life policy on those, because we talked about this earlier, you mentioned about not paying tax
Mhm.
on that money. Do I have to pay tax on that money?
No, you don't. That the benefit of whole life, and here are the pros and cons. The whole life, you started up years ago. You thought ahead and said, "Oh, whole life is really nice. Let's do that." As a thank you for starting it so long ago, you don't have to pay taxes on the gains. For an annuity, this maybe you rolled over your 401k. Maybe you had a life insurance payoff from another loved one, and you put it in, but the money you'll get immediately, and that will last past how much money was in the account initially.
Okay.
So the con of it is you'll pay taxes on it, but you'll get that money immediately, and it didn't have to build up over the years.
Okay. This is going to lead me into something else. As a senior, we've talked about, uh, final expense. We
Mhm.
talked about taking in, buying insurance policies for grandchildren, nieces, or nephews. Okay. And also, just on any money that's left over, you can also you can leave it to different organizations too. Okay.
Yes.
But I want to go there with that. Uh, but we all see commercials. I see the commercials all the
Yep.
time.
Yep.
And because I'm in insurance, okay, I'm going, you're talking to me about buying my life insurance policy. And as an insurance person, I'm going, why would I do that? Why would
Yeah.
I sell somebody my life insurance policy when I can take the money out of it?
Yeah, and that's a common misconception that we see, because life insurance used to be strictly death benefit.
Yeah.
You give it to, it's all just a gift to give on to the next generation, and it's very sweet. But hey, you might need some money now, and it that was heard. And in about 2 decades ago, the life insurance industry said, okay, we're going to do more living benefits. And so people who are still thinking, oh, it's only for when I pass, they don't understand that you can still take out money then, or you can surrender the policy completely and basically sell it yourself. When you see those companies saying, "Hey, we'll buy your life insurance," it may be tempting, but for the most part, it's usually unnecessary. It's something that they will get the payout instead of your loved ones. The whole point of you opening up the policy, and that that's more of the moral issue. Are you fine with whatever they're trying to pay you, or can you have it stick around for your loved ones?
I think if I were to sell a life insurance policy and if I didn't know anything about life insurance, okay,
Mhm.
and I say I wanted to, like what you were talking about with the annuity, just have more discretionary income because it's getting more and more expensive to live,
Yeah,
okay? And I'm sitting there with it, and my children, just say my children are, they don't need me financially. I did a great job raising them, okay? They're completely independent, and they don't need me for financial.
Yeah.
Okay. People have to think before you just go sell it to an insurance company, because that's
Mhm.
insurance companies that are asking to buy it from you.
Yeah.
Talk to a life insurance agent that's not trying to buy it, because you're going to find that you could take that money out of there
Mhm.
and not lose any interest and not having to pay somebody a loss. I think that's
Yeah.
where I'm trying to come from. So if
Yeah.
you're selling your policy, that insurance company is not giving you the full value of what it is. So if it's
Mhm.
worth, let's say, $500,000, they're going to take a percentage. And I don't, because I don't do that. I
Mhm.
don't know what that percentage is. I understand it's fairly high.
Yeah, it's more of they're they like to go after the target market of seniors because one, they realize, oh, my kids are doing well, I don't need this, and two, they're not going to live for much longer, so we're about to get a big payout for half even a quarter of the price because you can't get that payout as you're living. But talking to the right agent as an advisor, I have a fiduciary duty to make sure you are everything's in your best interests, and I have no reason to buy your policy. Uh, there are distributions in your permanent, in your whole life, your universal life, that can be distributed to you each year. That comes from your death benefit. You could pull out. You could slowly pull out of it, so you could still get paid off for your life insurance policy.
So are you talking about those riders that come along with a life insurance policy? Because I know there's so many different types of riders. So let's
There,
talk
yeah,
about that a little bit.
yeah, there are different riders, and we will absolutely go into that. But even the cash value itself, you can still pull from, and that's without riders. So, one thing that people constantly look for is one, not outliving their money, and two, long term care. Back what I was saying about Mac, he needed long term care for the few years that he was ill. Luckily, he recovered, but during that time, uh, the riders. So your let's see, this one is your living benefits rider. So with that, you are given more money from your life insurance policy for being sick, and you get you get the money to pay off whatever you need for these benefits.
Mhm. So long-term care, that's real important.
Yeah,
I think I'm glad you brought that up, because long-term care, people don't think, oh, I'm not going to need long-term care.
it doesn't cross our minds. Yeah.
We don't think we're ever going to need that. But I remember, if I'm going back and I'm remembering the statistics, it increases more that you're going to need some form of health, either in your home
Mhm.
or in a long-term care facility.
Yeah.
Um, and it's expensive.
Hmm.
I mean, we're talking something like, I think I have some relatives that are looking into moving into like assisted living,
Mm.
and we're talking something about $10,000, $20,000, depending upon the facility, a month.
A month. A month.
A month, yes.
Oh, yeah. And
And
to harp on that, like long term care is something that we don't think about, and it's not even considered. But let's talk about how modern financial planning is as a whole. It used to be, we retire at 65. We probably have about 15, maybe 20 years if we're lucky to live. So we're trying to get our money to stretch about 15, 20 years. Now we have the greatest problem of modern medicine, better hygiene, and overall better lifestyles. We are living so much longer as a lot of people are hitting their hundreds, some hitting into 105s and on. And we need that money to stretch so much further. So our chances of needing long term care is way higher. And so when we look at at say an annuity, it's really nice to know that you will never run out of money, no matter what. And that sort of security is something that we all need.
right. So when you're talking about financial planning. Okay. I think with financial planning, and this is something that I don't think a senior has to do. I think you should be doing that. I think you should be doing that way before you become a senior.
Yeah.
I mean, when you're younger, you're thinking about, okay, I got to get my children through high school. I got to get, take care of all of those needs. Then you get your children in college, and all of those needs are taken care of. But what are you going to do with the rest of your life after you do retire? Okay.
Yes, I would love to talk about that. I want to give you an illustration, Janice.
Yeah. Oh, I love to hear it.
Yes. Okay. I would like to bring up the famous Mount Everest and talking about specifically. Do you know when it was climbed, successfully summited?
Oh, I can't remember. I want to say the late 1800s, early 1900s.
Close. We'll get on that. So
Yeah.
the first one to reach the summit was Edmund Hillary in 1954, and he is from New Zealand, and he was knighted. He had almost every single uh, every single accolade that there is as a congratulations for summiting it. But about 30 years ago, 1924, so right where you're saying, is Edmund Hillary. And why do we not care about Edmund Hillary? Why didn't he get all that attention?
I,
He
I really don't have a good answer for that.
he didn't make it back. He didn't make it down.
Didn't make it down.
He didn't make it down.
Oh
As
my goodness.
yep,
Okay.
most deaths when it comes to Mount Everest is on the way down. People plan and prepare their entire lives or during that training time to make it to the top. But what they don't think about is how to get down.
Okay.
So when we do financial planning, it's all about, oh, where do I need to put my money? I want to get to retirement. When am I going to retire? And no one ever thinks about, how am I going to get the money distributed? How am I going to live off that? What does that look like? And when I do life insurance, I'm not just saying, oh, this is life insurance for you. I want to get the whole picture. And I want to know your Everest. I want to know when the peak of your retirement is, and I want to know how to safely get you down each and every step in retirement. And that's where life insurance comes to play.
That's extremely important. So I can give
Mhm.
you another illustration really quick. So I knew someone who saved and saved for a vacation. And I think they wanted to go to Japan. Okay.
Yeah.
And they saved, but they didn't plan what they were going to do when they were there. And they got there and they had nothing to do once they got there.
Hmm. Hmm.
And that's part of that planning. So, okay, you got there, but did you plan for the hotel and the food?
Yeah. Exactly.
And what did you want to see in Japan that you selected that? Okay. So it's important that you do that with your life.
Hmm. Yeah. And I think about this is an experience from scouting. There's a song. It's called "Back to Gilwell." So this is a story from the Great War, where the British were sent out overseas, and when they finished up the war, and the nation said, "Okay, war's over," and soldiers say, "Okay, what's the plane ride back?" And they said, "Oh, we don't have one," and so it's a constant. They had to make their own plan to get back to Gilwell to get a ticket back home, and that's a thing that is found today. Of we have our whole plan of attack, we complete our entire war, the fight to get to the top, and now you need a plan to get back.
Yep.
Mhm.
So important. How are you going to get back? And life's in stages.
Yeah, absolutely.
And
As
none of us want to talk about those final stages because it's uncomfortable
mhm,
and it depends upon where your culture is. But doesn't matter what your culture is or what your beliefs are, we're all going to go through the same stages.
yeah, Yeah, here's a blaring statistic: 100% of people die, and is some people don't know that yet, but it's hard. It's a hard realization to come to, and as morbid as my job line is, it's necessary. We need to think about it and talk about it.
I mean, absolutely. Even though it's an uncomfortable subject, okay.
Yeah,
So when you're doing, you're picking up insurance, or you do that estate planning, which
yep,
the insurance to me is part of.
yep,
Okay, so I mean, like, who wants to pay for health insurance? It's pretty expensive.
yeah,
Who wants to pay for automobile insurance? You're paying for the unknown.
yeah.
No one on a daily basis gets up and says, I'm going to go out and drive my car. You're not planning on getting in that car accident,
Nope, not at all.
but it happens every day.
Yeah, yeah, and that's a fear. That's something that keeps you up at night. Of hey, if talking to younger folk, I say, if you were to retire today, how would you do? Because you don't know how healthy you are until something happens, and even healthy people get sick.
Yes, even young children get sick.
Yeah,
Because
yeah,
I have in my family, and we're just finishing it. She's going to ring her bell. She's going to be 6 years old, and she's just spent 2 years with chemotherapy.
sorry to hear that.
Nobody wants to think that their children are going to get sick.
Hmm.
And you may have that life insurance policy that you took out. And I know there's what we call riders. We
Yep.
mentioned it earlier, that maybe there's something in there that will protect your children
Yeah,
because you
exactly.
plan on it. Because you don't know. I mean, every time I think about what this little girl at age 6 and what her family has gone through
Mhm.
over these last 2 years, it's been horrendous.
Yeah, my coworker just recovered from cancer,
Yeah.
and he is, I'd say, 26, and that, yeah, devastating financially to the family, and to him, it's now just an uphill battle just to make it back to where they were. And with the living benefits rider and chronic illness rider, you are able to double the money, so your life insurance will pay for that, and it's not a burden to your loved ones and yourself, because he still has plenty of life to live, and he's now giving these large expenses.
I know it's just I mean, I'm sitting here going, this is emotional. I mean,
Yeah.
it's so emotional. And even if you're not directly related to someone or have a friend that's gone through it, I mean, because when you see the commercials for Children's Hospital or St. Jude's, and you're going, this does happen in the world, and people have to come up with the money. And that's where uh, life insurance can help you, the writers in it. And it's just,
Yeah, absolutely. Because
yeah.
like we were saying, of being as healthy as you are right now, uh, someone who had cancer might not even be able to get life insurance. It's based on insurability. So that sort of health is critical. You don't know when to wait. The best time to convert your term into a permanent is that you get to keep your insurability of when you first signed up for that term. If you were to, go open up one by itself, it's going to be based on how healthy you are at that moment versus when you were first subscribing.
Because I know those writers really make a difference. I'm trying to remember in my mind when I was doing life insurance.
Mm.
I think there was a story about a young family who took out a large policy, and they picked up a writer that covered if something happened in a short period of time.
Yep.
This was just something that guided them to pick up this rider, and it ended up the rider was for something like $500,000. Well, it ended up that I can't remember which parent got sick, but one of the parents got really sick, and automatically, all of a sudden, they had $500,000
Yep.
because of this rider. Yes, that rider was expensive, and why they picked it up because they were so young and they had young children.
Hmm.
Why they did that, I don't know. But it was like, it was something guided them into that. And I'm not here
Yeah.
to talk about religion. So it, you know,
Yeah, I mean, there's always certain cases, special niches. A
yeah,
lot of things that we do with dentists and doctors
yeah,
is that they work with their hands. It's very valuable.
yeah,
So I have a dentist client who insured specifically their hands as a rider to itself. That if something were to happen, I don't know, go on a ski trip, go rock climbing, something happen to their hands, they get
right.
a payout, and that's the whole principle of a rider. Yeah, and luckily, a lot of life insurances, especially the ones I've written, come with those riders built in, no extra charge, and that's been a game changer and a lifesaver. Frankly, the whole point of my job is to take away that uneasiness, that pain that you feel of this uncertainty.
Yeah. So it's so important. I don't know how to express it, that I know I'm trying to get my son to buy life insurance, but he thinks he could put his money elsewhere. But that's his choice, okay? But it yes, you may have a portfolio, but you should have a well-rounded portfolio, and you should have some form of life insurance in that portfolio. And it doesn't matter if you're 30 years old. It doesn't matter if you're 60 or 70 years old and you're looking for insurance. It's still out there for you.
Right. Yeah, and when I talked about my Mount Everest example, there's always a baseline that's a few steps up, but it is your protection. It is your emergency fund savings. It is your debt consolidation, and it is your life insurance. As no matter what, you need that protection when scaling Everest. That equipment is vital and crucial. That no matter what, even if something happens, you will always have that protection covering over your entire portfolio.
Correct. And that's why people buy insurance. And one of the things people don't realize is that life insurance, when in the 1920s, when the stock market went under, who survived?
Yep.
The
Yep.
life insurance companies. Okay. So
Yeah.
just real quickly, I'm going to bring up information and how you can get a hold of Josh.
Mhm.
Okay. Information is going to be here. We also had it at the beginning of the show. If you have any comments you would like to make, I know that this is a pre recorded show. We would love to have comments from you,
Mhm.
because we would like to know, what questions you may have about life insurance or even health insurance. We would love to answer whatever we can. So you can find Josh at the numbers that are scrolling by here. We'll leave it on up here for a couple of minutes. And one of the things I know from picking up and listening to this, and from when we did our show a while back, I've seen your growth. I've seen your passion growing for what you're talking about. So I'm happy to have you back on sometime in the future,
Mhm.
and working with somebody who specializes in what they do. With what he specializes is in life insurance. He's a good person to talk to. He's going to know exactly what the latest is with everything within the life insurance industry. what the latest writers are, what is available. He's going to look at what your financial needs are. And and I'm anxious to see how you grow. I'm anxious to hear more stories from you and how you've helped people. I just think it's really great, and it's so much fun to work with you.
Yeah, I'm really happy to be in this. I do a lot of policy reviews, so if you're ever confused about what policy you have, I'm happy to do a look over. I am an active learner. I'm constantly learning, and there's no case that I'll ever turn away from.
Yeah. And policy reviews, like you said, you did them for your parents.
Yeah.
Policy reviews are, let's say that you took out life insurance at age 20.
Hmm.
At age 30, maybe you now have a family and your needs are going to change. Or maybe you want to increase that insurance. Maybe you want to take that term insurance and convert it over to a whole life insurance.
Yeah, and
There are
just
different products out there, okay? Or the policy review is, what can I do with that equity that's in my policy right now?
yeah, absolutely. And like you were saying with the story of finding policies from their parents, uh, that's something that happens more often than not, that they don't have a review or they don't realize it's around. So it's something
Right.
to always look at. Big life-changing events, especially when it comes to retirement, there should be a review for your policy.
All right. Thank you so much, Josh, for being on Senior Citizens Forum. I love to
Yeah.
have you back to watch your growth, as I was saying earlier.
Mhm.
And thank you, everybody, for watching a Senior Citizens Forum. We'll be back next week with another interesting guest. And everybody, have a great week and make sure you take care of your financial planning as soon as you can. Thank you.
Thank you, Janice.
Thank you. Bye.